Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex world of corporate filings. Today we're diving into Aurora Innovation's latest quarterly report, and let's just say it's a story of ambition, innovation, and a whole lot of cash being spent. Scroll form 10 crew 20 scroll. So, Aurora Innovation Incorporated, a company aiming to revolutionize transportation with its self-driving technology, has dropped its quarterly report for the period ending the 30th of September 2025. Now, these reports, known as 10Q filings, are like a quarterly checkup for a company's health. It tells us how they're doing financially and operationally. Let's kick things off by looking at their financial snapshot, the balance sheet. As of the 30th of September 2025, Aurora had total assets of a little over $2.5 billion. That is up from about $2.1 billion at the end of 2024. A good chunk of this increase comes from their investments. They've boosted their short-term investments significantly from roughly $1 billion to about $1.16 billion. They also added a notable $357 million in long-term investments, which weren't there at all at the end of last year. This suggests they are putting their money to work, betting on future returns. However, when we look at their cash and cash equivalents, things have tightened up. It dropped from about $211 million at the end of 2024 to just $87 million by the end of September 2025. This is a pretty significant decrease and usually signals that the company is spending down its readily available cash. Turning to liabilities, total liabilities are down to about $219 million from $263 million at the end of 2024. This is a positive sign, meaning they owe less to others, but the real story here is stockholders' equity. It jumped from $1.87 billion to nearly $2.3 billion. This increase is largely due to issuing more stock, which we'll get into more as we look at the cash flows. Now let's talk about how the company is actually performing its operations for the 3 months ending the 30th of September 2025. Aurora reported revenue of a mere $1 million. This is a big leap from zero revenue in the same period last year, which is exciting because it marks their commercial launch of the Aurora driver for freight. However, and this is crucial, their cost of revenue was $6 million. This means for every dollar they brought in, they spent $6 to generate it. That's a tough ratio in any business. Their research and development expenses remain high at about $179 million for the quarter, up slightly from $169 million last year. This is expected for a company in this field, constantly innovating. Selling, general, and administrative expenses also climbed to $38 million from $27 million. The bottom line, a loss from operations of $222 million for the quarter. This is higher than the $196 million loss in the same quarter last year. Overall, their net loss was $201 million for the 3 months ending the 30th of September 2025. Looking at the 9-month period, the story is similar. Revenue was $2 million with a cost of revenue at $11 million. Research and development expenses were $551 million, and selling, general, and administrative expenses were $103 million. The net loss for the first 9 months of 2025 stands at a hefty $610 million. It's a significant increase from the $555 million net loss in the same period last year. Looking at the equity section, both Class A and Class B common stock amounts are detailed. We see a significant increase in additional paid-in capital. This is essentially the amount investors have paid for stock above its par value. This big jump is directly related to their stock offerings. For instance, during the 3 months ending the 30th of September 2025, they sold 80 million shares of Class A common stock in an AT market offering program. This brought in $460 million in net proceeds. Add to that another 147 million shares in the 9-month period, totaling $859 million. This shows they are actively raising capital from investors to fuel their operations and development. This brings us to the cash flow statement, which is where we see where the money is coming from and going. For the 9 months ended the 30th of September 2025, Aurora used $435 million in operating activities. This is a slight decrease from $469 million in the same period last year. This improvement is partly due to settling their annual bonus in equity this year, which means they didn't have to use as much cash investing activities. However, are a big drain. They used $518 million in investing activities, a substantial increase from $245 million last year. This is driven by buying more investments. Remember those increased investments we saw on the balance sheet? This is where that money went. On the financing side, which is how they raise money, it's a different story. They brought in $828 million from financing activities, a huge jump from $475 million last year. The main driver here is those stock offerings we just talked about, especially from the At the Market program, bringing in a lot of cash to keep the lights on. Now, let's dig into some of the notes. These notes provide important context and details about the numbers. Aurora has a significant amount of acquired intangible assets carrying a value of $617 million. These are essentially the value of things like technology and patents they've acquired through business combinations. They are being amortized over 10 years. Importantly, these assets were considered in process research and development until they were brought into service in the second quarter of 2025. This is a key point showing their investment in future technology. Under risks and uncertainties, Aurora is upfront about their need to raise more capital. They acknowledge they will continue to incur operating losses and will need to raise funds to support the development and commercialization of their self-driving technology. They believe their current cash and investments will be enough for at least another 12 months. This honesty is good, but it also highlights their reliance on continued investor support. Their revenue recognition policy details how they earn money. They recognize revenue for transportation services as goods are transported. This means they are getting paid for actual delivery, which is a sensible approach in their business. This is a big one, especially for growth companies like Aurora stock-based compensation. Payments made to employees in the form of stock or options was quite high. For the 9 months ending the 30th of September 2025, it was $140 million, up from $109 million last year. This is a significant expense. But it's how they attract and retain talented engineers and staff in a competitive market. They provide details on their restricted stock units, or ARFAs. As of the 30th of September 2025, there were 88 million unvested ARFAs, representing about $416 million in future compensation expense. This is a substantial amount and a long-term commitment to their employees. Similarly, stock options are a big part of their compensation. As of the 30th of September 2025, they had 95 million unvested stock options, representing $52 million in future compensation expense. The intrinsic value of options exercised was $90 million, meaning employees made a good profit by exercising those options. This is a strong indicator of their stock's performance and employee motivation. This section details their derivative liabilities, which are financial instruments whose value depends on the underlying asset. For Aurora, this includes warrants and earnout share liabilities. The total derivative liabilities were $36 million as of the 30th of September 2025. The earnout share liabilities, valued using complex Monte Carlo simulations, were $24 million. These are essentially contingent payments tied to certain performance milestones, and their valuation reflects the uncertainty and potential future payouts. Aurora operates as a single reportable segment managed by its chief executive officer. This means all its activities are geared towards developing and commercializing the Aurora driver. They've started to recognize revenue and cost of revenue in this segment since the launch of Aurora Driver for Freight. This section provides management's perspective. Aurora highlights its mission to deliver self-driving technology and its driver as a service, or DaaS model. They plan to partner with OEMs and fleet operators, keeping their own operations asset light. This is a smart strategy to scale quickly without massive upfront investment in a physical fleet. They've launched Aurora Driver for Freight, focusing on trucking and plan to expand into passenger mobility and local delivery. Their strategy seems sound, but the execution is key. Here, Aurora is very direct about its financial situation. They have significant cash tied up in short-term and long-term investments, totaling over $1.5 billion. However, their actual cash on hand is down to $87 million. They admit they're burning through cash and will need to raise more capital to continue developing and commercializing their technology. Their recent stock offerings are a testament to this ongoing need. The increasing cash used in investing activities is mainly due to purchasing more investments. This is a strategic move, likely to generate some return on their capital while waiting for their core business to mature. However, it also means less cash is available for immediate operational needs if things go south faster than planned. Aurora mentions they might be involved in legal claims from time to time, but they don't see any currently as material to their business. This is standard for most companies. Here they confirm their internal controls and procedures were effective as of the 30th of September 2025. This is important for investor confidence, showing they have systems in place to ensure accurate financial reporting. The risk factors section is always a crucial read. Aurora reiterates that their limited operating history makes it difficult to predict their future. They list a long string of challenges, from developing and validating their technology to managing supply chains and navigating regulations. The fact that they've only recently started generating revenue and expect to continue incurring losses is highlighted. This is a high-risk, high-reward scenario. So, what is the story with Aurora? They are clearly a company playing the long game. They are investing heavily in a revolutionary technology, the Aurora driver. Their strategy of partnering and adopting an asset-light model is sensible for scaling rapidly. They've demonstrated they can raise significant capital, which is crucial given their ongoing losses. The recent commercial launch, while generating minimal revenue so far, is a critical step. However, the numbers also paint a picture of a company that is still in its early stages. The high burn rate and reliance on continuous funding are significant risks. The drop in cash on hand is noticeable, though offset by substantial investments. Their success hinges on truly commercializing their technology at scale, which is a massive undertaking with many moving parts. The increase in stock, base compensation, while standard, also represents a substantial future cost. My takeaway is that Aurora continues to invest aggressively in its future. They are prioritizing technology development and commercialization over near-term profitability, a common strategy in the tech and autonomous vehicle space. Investors in Aurora are betting on a future where self-driving technology dominates, and Aurora is a leader in that revolution. The key will be their ability to scale their revenue generation much faster than their expenses and to continue attracting the significant capital needed to bridge the gap until profitability. That is our breakdown of Aurora Innovation's latest quarterly report. What is your take on these numbers and what they signal for the company's future? Are you excited about the potential of self-driving tech, or do the financials give you pause? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep corporate dives. Don't forget to check out the Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you next time.